Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
What happens if it runs to 105, let's say tomorrow, and then it sort of scares us back to 102? Well, obviously I'm saying, I'm giving a lot of what ifs, but
right.
That obviously happens. Would you be more inclined to, if it spiked up and came back to that 102 level, would you still feel comfortable in the next week, or you're not going to want to chase it from here, would you?
No, we don't want to chase it. That's why what saves us from chasing, Steve, is the percent-hour retest method. So when you get a bull confirmation where it's kind of gapped up, you wait for one of these nasty little bars down like this one back on the 24th of March, where it retests right back there under the 80 threshold. That actually was even though the next couple of days were kind of choppy, it was actually a pretty decent little pickup point from 101.5 all the way back up to 103 over the next week. So we're looking to get that first initial pop in our favor, or maybe then take a little bit off and then manage our trade from there, so that if it does happen to break, we've already taken some profits off along the way. And so, that's really helpful. I do want to look at just a couple others before I have to jump. Let's look at the yuck. You can see the yuck. I just love to say that. Great opportunity on the downside back in late February and into mid-March. Caught that whole move. We talked about that one. But look, it had that little bull confirmation on percent R. We had a retest coming right there. Look at that. It retests right in there. You get one bounce up, and you can see it kind of when the Bollingers contract back inside the accelerations. That's usually going to be a little resistance short term. You can see that hitting, but then it actually went through another little acceleration phase when it popped up there back in early June. Got a little pop from that point. This retest was indeed violated right there, so you're done with that trade. You're not bearish here because it's just hitting the lower end of the range, but it doesn't follow through under this low. Intraday it tries to in the next morning's open, but then it flips right back up, and now it actually technically is bull confirmed, but it's not as strong as CDD. So I would say that's still the best-looking one. If we look at what else was the other one we were going to look at? How about SFC? We didn't look at that one.
Let's take a quick look at EUI also, just because I'm...
Yeah, so SFC is bullish, so that one looks good right now. It's confirmed, but you'd like to get a retest like what you saw back here in May, give you a good little low-risk entry. And then EUI, as we were talking about, just going over bought here today. So you can see, in comparison, a lot of people will draw support and resistance and say, oh, there's all this resistance, no way I'd fool with that. But technically, if it follows through above this high based on these rules, 64.73, today's high, if it closes above that 64.73 real quick, that would be a bullish confirmation. So, it looks like, the dollar's looking pretty good against most of these majors here in the short haul. So basically, that's what we're looking at there.
Hey, Price, do you look at these, and does this help you when you're looking at equities? Do you think about how the dollar's doing, or not necessarily?
I keep an eye on it. I think it is important when you look at the multinationals. They're obviously going to be very influenced by the dollar. I think also, you consider what's happening across some of the other foreign markets, China and the other major booming kind of international markets. On the upside and the downside, it is worth keeping an eye on those. And so you get a general trend of where is the dollar headed in this recent upturn. Right now, again, CDD, I'd be looking for the first pullback. I wouldn't buy it here, but I would say, look for that percent-hour retest of that 80 threshold, and you'll probably get a nice little, very good low-risk entry point, because that's the strongest-looking one among the majors we just looked at.
That's great, Price. Well,
Thanks,
if you got to go, I appreciate it. You're about out of time?
Yeah, I got to run. I apologize.
No problem, Price. I appreciate it on behalf of the International Securities Exchange and all the attendees. We had a great crowd tonight, and again, most people are used to the 4:30 start Eastern, but Price had something to do, so we're more than happy to accommodate him, and we'd love to have you back sometime in the next couple of months, Price. Thanks again for all your insight.
My pleasure, and anybody can call us at our 800 Big Trends number if they have any questions or want to get a copy of these slides or some other trials, any of our other services that use these indicators. But thank you. It's always a pleasure being with you, and I hope to see you again soon at one of the upcoming live events as well.
Absolutely, Price.
All right,
Can't
thanks,
wait.
Steve.
Take care now.
All right,
hey, guys, everyone,
everybody.
Take care now, Price. Listen, if you want to stay on another minute or two and ask me any questions, first of all, I just want to say thank you to Price. So you can go to www.bigtrends.com. You get a free copy of today's slides plus a free bonus, 13 weeks of his popular net letter. You can go there, right there. And as long as we have a decent crowd, I want to answer a couple more questions. Since we have a pretty decent crowd, I see a couple questions. I want to answer them. Raphael wants to know if we have a, his question is, do you have a concern trading several pairs that might be correlated? Raphael, this is amazing you asked this question because I just wrote an article about trading assets that are hopefully non-correlated. And so I'd love for you to read my article that will be published. I'm not sure. It'll be published somewhere on the ISC website and other places, but it's a great point, Raphael. The idea is, at least in my view, it's always great to find assets that you think are undervalued, but if you end up buying what you think are all undervalued oil stocks or undervalued airline stocks or banking stocks, you end up with a lot of industry-wide risk. And the same thing here with FX. So you want to try to find something, some of the one or two pairs that isn't necessarily correlated. Great point. So you have to do some correlation studies to take a look at that. But that is an awesome question. And Raphael, please look out for my article because I can't believe you asked that exact question. I just spent a couple of days writing this article, so I hope it comes out. Let me just say, David has a question about the spot rate. So he's saying, well, if you take the inversion of the spot rate, you got 6462. That's correct. 6462. I don't know why. Price had a price of 6472. Maybe it was the difference of the closing of the options. That could have been correct. But again, yes, you're just going to invert it. In fact, a great place to go, guys, if you want to just look at these charts and maybe you don't have access. Maybe your broker doesn't have access to this or you're just getting a brokerage account. You can go to bigcharts.com. You can also go to Yahoo Finance. You can go to the ISC, www.isc.com, FX, and you can actually, we have an Excel spreadsheet that you can download a couple of years worth of data. So and then draw your own chart. So again, these are all dollar relative, so that's another great way to learn more about it, to actually get the data and you can mess around with it. Let's see, we'll take some more questions. So John wants to know if the CDD goes up, what does that mean? That means, remember, all of the pairs are dollar relative. So it's the U.S. dollar divided by another currency. U.S. dollar is going up. That means relative to another currency, that value's picking up. So think of it this way. When you buy IBM, you want IBM to go up. These are dollar relative products. So you're looking, at least from the perspective of the dollar. Buying calls would be you're bullish on it. Buying puts, you're bearish. So yes, if CDD is going up, the U.S. dollar is going up. CDD going down, that means the U.S. dollar is buying less. I hope that helps, John. What's the normal? Leonard wants to know what the Leonard wants to know what the normal spread is between bid and ask. The normal spread between bid and ask is actually about 4 or 5 cents. So the volume has been picking up, although some certain strikes don't trade each and every day. But the bid-ask spread, because we have one of the largest market makers in the world that's quoting this, and they really feel confident about this product. They quote it 4 or 5 cents wide, 3, 4, 5 cents, depending on the strike. So very, very narrow. And David wants to know my name. My name's Steve Meisinger. I'm the host of the International Securities webinar series. We bring in a lot of guests. So, David, I thought, I guess I introduced myself initially. Steve Meisinger, and you'll definitely want to read this article about correlation.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.